Hey, Alpha fam, welcome back to another episode of Alpha Commission. Today, of course, I want to go over the pump that we had on the chart just this early morning. Of course, I warned you that there would be fake outs, and there's been a couple of them. Two of them were pretty small, but that last one could have spun a couple heads. I saw some people talking about pretty insane numbers about Bitcoin as they were projecting where that pump could go. And it just seems a little bit, offbeat when we consider that it's the weekend, there's weekend shenanigans. Of course, we have the war of the CME gaps going on right now. And Monday is going to have to settle those things. Tuesday is going to have to settle those things. And of course, we have the Fed decision on the 15th. So it's a little bit early to be getting your bullish hat on. I think as we look at this downtrend, especially this latest drive down, it's been pretty ugly. So there's no reason to get ahead of yourself and feel like you missed out on something. As I mentioned in the last two episodes, there would be fake outs on this way down, and also that you have plenty of time to get back into the market. You do not need to feel rushed. So if any guru out there, if anyone is trying to, push you in the direction of bullishness in a macro downtrend, in a global economic downtrend, right? With downward pressures, facing us as we look into the week, I would just suggest ignoring those voices, filtering them out. You can always take trades, right? There's always going to be a pump here or there. We saw it on Zilliqa, we saw it on UNFI, we are seeing it on, what is that coin? FLM. And, of course, there's going to be pumps, but that doesn't mean that you have to get over invested in the market or super excited because those pumps, those relief rallies are designed to liquidate you and basically separate you from your capital on the way down. So let's just take a closer look at the CME gaps. As I've been mentioning, we did have this wick down to 25 to 65, and we filled half of this CME gap. You can see that gap in the chart there. But the other half is still waiting to be filled. That's something that people have been trying to look forward to for, over a year. It's kind of like the great white whale, and you're the captain, hunting it down. Just the Bears have been trying to fill this gap. Not sure why. It's not as significant as you would think. We put in like gaps, all the time. I'm using the 6 hour chart, but of course, we primarily look at gaps on the daily. The 6 hour gaps do tend to get filled on the smaller time frames, so I do check them out from time to time. Just call them quarter day gaps. And especially in stocks, they do tend to have some price movement across from them. Crypto is a little bit different. But if we look at the chart here, we can see that we did have this quarter day gap here. We ended up wicking down before the CME shut off again. And then, of course, the 24-hour exchanges just drove the price down. And so we have another huge gap, just as big as this one used to be. We have another huge gap put in this area. And so again, I think now bulls are going to be hunting that gap, just like they've been hunting this gap ever since we put it in on our drive down, in May. And so again, we have like a war between the CME gaps right now. We have bulls and bears all hunting these gaps, and eventually they're going to need to be filled. So we'll find out like who wins this war. But again, I just want to emphasize these gaps don't have to be filled right away. They can be filled months later. They can be filled a year later. It can take its time to fill these gaps, and they might not even fill them fully. Okay, so don't base your strategy solely on the CME gaps. When people are saying, there's a CME gap, I want to fill that, just, let that roll off your back. That's not a proper strategy. Okay, that's not a proper trading strategy. If we get into that area based upon, other TA or based upon other real factors of the market, then the exchanges may push to fill the gap, along our path. But that doesn't mean that they're going to, spend, tens of billions of dollars to go against the market or against the trend just to fill a gap, right? So that would suggest that this gap is probably the most likely to be filled. And then perhaps if we get some type of retracement or retesting, then perhaps this gap would be filled. As for this one up here, it may just take a while, right? It may be the next bull run that fills it, but it's probably better just to consider these two as competing rather than being obsessed with this one, the way that bears were obsessed with this gap for over a year and they kept targeting that gap, which means they lost opportunities. Whenever we were dumping down, they just thought, oh, we're going to finally fill the gap. And they just lost opportunity after opportunity after opportunity after opportunity as they just kept having their eye on that gap. So, just some friendly advice there. Um, if you're new to the world of CME gaps, you probably, could hear some overemphasis of them. Moving along, let's go ahead and take a look at the 24-hour exchanges because we do have that continued drive down that I was suggesting. And of course, if we look at the 2-hour, you can see the fake outs that got put in. I was giving my warning somewhere around here that probably this pump was just going to be a fake out. And sure enough, it ended up being a fake out. We came to the trend line. Well, we basically established a trend line. So we established a trend line and then we got hard rejected from it. Again, we had a pump. It went to the trend line and then we got rejected from it. Here we put in a little bit of a double bottom. I mean, it wasn't really a double bottom because you can see this wick low here, but we did have kind of a double bottom structure, which gave a little bit more support. There was a little bit of an energy in the market to push up, but we didn't even get a 4-hour closure above the trend, and so it was pretty clear that this was going to be a fake out and that most likely it was just retagging our 10 EMA on the 4-hour chart, right? So sometimes when you have a downward trend like this that's just moving down very quickly, but does kind of roll, right? The trend line, isn't really perfect, right? We can look at the 3-hour. You can see how it's aligning very well here. But what makes it not perfect is that your EMAs are curving, right? You can see all these curves. And so every once in a while, you get kind of a stretch goal on it, right? So you could consider this as, tagging the 20 on the 3-hour, or you could just look at the 4-hour and just say, okay, we basically went to the 20 MA and now we're curving back down, right? So don't, don't be fooled by these things. You would really want to see a medium time frame. I mean, something like a 4-hour, right? Maybe a 3-hour, 4-hour, maybe even a 6-hour above that trend line in order to think that we might get some bullishness. And you would want to take out this previous high area. You wouldn't want to just be just in that area and then suddenly going long. You're most likely going to get liquidated as they drive the market back down, which is exactly what happened. People got kind of trapped there. And it's just a little fake out, right? So, that was a sizable pump. It was approximately 5%. And I made a list of coins that outperformed during that pump. I published it actually to the Discord. So if you guys want to check out the Discord, the link is in the description of the video. And, I just mentioned that, for example, Render did 18%, CeeLo did 18%, Polk did 16%, Eagle did 16%, Mana did 15%. And then A whole bunch of coins I listed did around 11 to 10%, and the rest of the rest of the coins in the market, I mean, obviously there's going to be ones that I missed, but most of them did around like 4% or 8%, with the ETH doing 8%. So you can see that the ones that I just listed, and you can replay if you want, they significantly outperformed ETH, right? Whereas the rest of the market primarily did the same as ETH or the same as Bitcoin. So if you are going to try to play these bounces, you probably want to play the stronger performers that outperform the market. And then you would want to pick the ones that have the most bullish chart, right? So you wouldn't want to have ones that are putting in lower highs, but you would want to have ones that either have a double bottom or that, even if it's possible, that have a lower high on the chart. That way you just increase the odds that your coin won't fall to hell if Bitcoin suddenly turns around, right? But as you can see, we are continuing to dump, and that is exactly what, I was suggesting to you to not be faked out by. And you probably don't want to be taking longs in a downtrend anyway, right? That's just going against the trend. But some people just like to lose money. So we went over the CME gaps. Let's see. Our current structure, you know, we've we've broken out of that, that big channel that we were in, and so we're kind of in this ad hoc kind of lower channel. I'm not even sure exactly where it aligns with. This is the CME gap right here. So I would just suggest it's something like 24,000 or 26,000. And then of course our top here is 28,000. And that aligns with, some of this support way back here, but it's barely support, so it's pretty hard to understand exactly how we would bounce in this area. We could just fall straight through it. This is very weak, very, very weak support, but it is significant enough that we can put it on the chart. And so there you have different levels, if you want to use the ones that I'm looking at. I could be wrong, like we wicked through this, and maybe we'll wick through it again. But sometimes these hard falls do pass through levels, pretty quickly, and then they bounce back up to some support. So you kind of don't even count this really, right? But my horizontal boxes for potential buys are still in there. So we did have that first DCA point, and of course, you probably would have wanted to sell it at resistance because we are in a downtrend. And then we hit another DCA point, and then you probably would have wanted to sell it, again at this. Actually, this is the one that we hit first, and then I guess we hit this one right here, right? We actually squarely hit that DCA box. You could sell it at the resistance. We came down here, you could DCA in at the second level, and then you could have just held it because you were in profit. And then, maybe you would want to take some profit, put some money in your pocket, when we hit resistance. And as we started to break down, you might have taken full profit on it. And now that we're reapproaching that box, you might want to DCA in again. I mean, look, like we're basically tagging my DCA box. And so again, like this is a good value spot to DCA. It's not any of my three targets. The three targets that I have are these ones. These are the big DCA zones that I want. Pardon me, these are the big DCA buy boxes that I want to buy at. These ones, these green boxes are the zones that I would consider buying in. But really, these are the boxes that I'm targeting that are more along our fib lines. The zones are more established by the consolidation at the side of this drive up, and then also by other factors like EMAs. But these buy boxes are pretty much established by fibs and by where I think price might dip to if we have one of these hard falls and then we wick down to it, right? So these are the three levels that I'm primarily targeting, and everything else is just, kind of wishful thinking down here. I do have this diagonal, which can kind of show the direction that you would expect um, Bitcoin to fall in as we continue our path down. So if you are targeting the same boxes that I'm looking at, then of course you could consider these areas. Kind of conservatively, just to estimate, you know, when that might be, or what price it might be, because obviously these things stretch over time. Let's see, I think I can remove that. And here would be a more aggressive version of the same thing, right? So just made two versions in case we have quick drops, and then in case we have just a kind of slower movement where this is just sitting on top. And you can just imagine for yourself. We also have this kind of radiating channel that we've been going through. And you can see we've been respecting it pretty well. This was a nice channel or a nice trend. And then we wicked right down here and we're breaking down. That would suggest maybe that $24,000 level, just if this is respected. I don't know if it will be. It's kind of weird over here. So, it might not be the strongest one. You can see how we pumped straight up through it. So even potentially we could come all the way down, to this 20,000 here before we start hitting resistance. And that just contradicts, some of these other perspectives. But you can take a look at how, geometrically these things might line up and where you might get hiccups at, what might slow you down. And you can just imagine the potential path of price action as we jump. You see this, like jumping right here to here. And then we got on top of this, sat on it, and then broke all the way down. So you can just slowly imagine like where price might meet resistance, and that can give you a better idea of where you might want to time some entries or take some small amount of profit if you're in a long or a short. Same thing here. We have this kind of longer radiating up, lines radiating up, and so you can see actually where we are right now. Where we're bouncing right now is actually on one of those lines, and where we bounced over here was both on this diagonal, and also on this horizontal. So again, you can imagine that we might break down to that 24 where we have this diagonal line and then we have this horizontal line, but that we could potentially break through that and come down, to this 20K or even to this, this zone over here, which would be somewhere between 17 to 20K. And that would be, um, that would be realistic. It is realistically possible. It doesn't have to happen today, just in the future. You can just imagine how these levels might be interacting with each other. Ignoring the signal here and here, we still have that bear flag printing, and it does seem to be playing out now, where, for a couple weeks, well, probably a month, I've been pointing out this bear flag that was being printed, and that it would likely take us to that $22,000 to $23,000 area. And if this diagonal does act as kind of a support, then maybe it'll be closer to 23,000 to 24,000. And if it doesn't act as support, then maybe we could see 20 to 22,000, right? If we just drop to the monthly or one of these weeklies. And that would also be consistent with our fib channel, right? And the fib channel would also suggest that we could play in this range here and tag the bottom of it, perhaps as low as like 19,000 before getting some type of bounce, possibly a rejection. Or we can just get wedged into this diagonal here within the fib channel and perhaps even break up, right? But if we look at the monthly and the weeklies, like we have space to play here. Like we've gotten out of this area and we're now in a new playground area. So there could be some interesting price action around here. And if we have the alpha origin channels, then you can see what I suggested, that we were going to continue to drive down and maybe hit these diagonals, right? So perhaps 25,000 to as low as 22,000. These are just different ways of visualizing how price can move based upon how it moved in the past. And since we did have really good support on this diagonal, just I would suggest that, 25,300, 25,300 is probably going to be, some type of temporary support, maybe 25,200-ish, right? So somewhere around there, we might start to get some bouncing and consolidation before breaking down further. Not sure, just if history has anything to say with it, that line does tend to provide good bounce support. But as you can see, price action does cross through it, you know, pretty significantly. So cross through it, cross through it, cross through it, cross through it. And so even if this line gives us some resistance, most likely we'll cross to the other side, or we'll pop out of it. Like price doesn't like to be sitting in this channel here. And that's why I made these alpha channels so that we can just imagine that. If it does come down here, then we are going to be entering that really good value zone where, between this blue line and that red line has just historically been a really good place to buy. Really good place to buy. So if we do enter that 20,000, a lot of people will be buying there. Does that suggest that we're probably going to go lower, or that we might front run it and bounce above it? Maybe we could just bounce at that, at that $25,000 area and just front run this. Maybe a little bit of a wick down to like 22,000 and then like bounce off, not even hitting this area. Or like in this one, like maybe we could just cut all the way through it and hit some really low levels. So just be open-minded to both of them. And again, that's why I have these DCA boxes at different levels, because we don't know how price is going to behave or what the macro economy is going to suggest and how these Federal Reserves are going to react to inflation, right? If we do use this, let's not use that one. Let's use this one. If we do use this diagonal, then it would suggest that if we do get to here, that probably, 17,000, maybe a stretch to 14,500 is probably the lowest that we would see, just if we use this theory. And that, 18 to 19,000 is just a really good buy. And then if you had something to target, 21 to 23,000 would be a pretty nice juicy target also, if you want to be more conservative. But of course, there's still that bullish model, um, which is possibly in play, and we haven't invalidated it yet. And that would be to perhaps do something like this, right? Where we actually kind of double bottom, maybe even triple bottom, then bounce back up, retest our yellow kind of rejection line for bullishness, for macro bullishness. Anything under that yellow line, I've just designated as pretty weak. And so we could perhaps get some exuberance over that, like we did over here. But I would just suggest that you would probably want to start taking profit in that area because of the, strong resistance that we would be having in that zone. Probably take the majority of your profit there if we do have a nice bounce. And then perhaps this chart would do a quarterly backfill to the same level, which would bring us to that red line, which itself would represent, an extremely good value on this line, the same way that this was kind of a quarterly backfill of this summer, or um, even though this was COVID, it was a backfill of this price. And so you could potentially have the opportunity to buy these prices again if we do something similar towards the end of the year or towards next year. Um, obviously, this is just drawn out. It doesn't have to work this way, but I would suggest that we could go sideways until the end of the year, and then perhaps we have a quarterly backfill sometime in maybe spring or summer next year, if we follow a similar pattern to what happened in 2018 and 2019. And of course, that doesn't have to happen that way. It's just a suggestion based upon the possibility of repeating a similar type of model bullishly, right? The non-bullish suggestion is that we actually hit these lower levels, and then we have a much longer, crypto winter than what you would think, and that would be tied, of course, to the macro economy. Of course, we have met the threshold for that head and shoulders, and so far we haven't broken below that measured move. Um, the only reason I have this blue line here is if we do consider that, we have kind of a blow off top scenario where we basically had the blow off top up here, kind of like early on. And so this measured move might be from here. And then, the chart may actually be suggesting that we go as low as like 18,000, or so. And maybe even if this was supposed to be a bigger blow off top, then maybe even lower. And that this was kind of like a hidden blow off top where the market front ran, right? The market front ran the blow off top. And so unlike in 2018 when we had a blow off top, right, like this at the top of the market, instead we had a rounded market with like two mounds. And I'm just suggesting that there could be some shenanigans, some kind of market maker, you know, um, fake out going on here, where if perhaps we did have like a, 100 to 120, thousand blow off top, that perhaps the measured move of this head and shoulders would actually be, something like 14,000 to 18,000. And so, we'll really want to see if we violate this area. If we don't violate this area, then basically we're going to be doing the same thing that we've done, almost every cycle, which is play out the measured move of the top of the market, and then that's where we bounce from. But if they hid the top of the market by front running it, then perhaps this line is lower than what we think. And so if we break our current line and we do start breaking down, this theory might actually be true. And so we might want to be targeting those lower numbers in particular based upon a hypothetical 100K market or 120K market. And if it was 120K, then the measured move would be down at that, like 15,000-ish, maybe 14 to 15,000. But we'll see. This is just conjecture and kind of a hypothesis. It's not really meant to be taken too seriously, just a thought problem. And of course, the reason we can think that we might deflect bullishly is that there may be some type of modified bat in this area, which could potentially take us up to, 42,000, 50,000 before getting rejected down. And this is a little bit of there's a lot of fudging in here. There's a lot of wiggle room and just, psychological projection, not really mathematical projection. So take this all with a grain of salt. I'm just providing a bullish perspective, so that it's not all bearish and so that you can at least be mentally prepared for the possibility that we could have a bull run. I'm not saying that would happen. That's not the direction that I lean towards. But if you wanted to just have an image of the possibility of it so that you're not inflexible, then I'm providing this one here. This is not what I believe will happen. I do believe we'll see those lower levels. But again, just for neuro flexibility, keeping your open mind to profit, potential profit, without missing moves, I suggest this is possible. And of course, that would also align with this kind of like macro wedge that we're putting in place. And you can see that we have pumped off of that before. So again, if you combine these three systems together, it would suggest that, yeah, maybe we could wick down to 22 to 23,000, but then perhaps this bullish model could be put in place. All right, guys, I think I'm going to end it there. I just really wanted to talk about that fake out that we were having on the screen and just encourage you guys to remember that, there probably will be fake outs to the downside. And while you want to keep an open mind, you don't necessarily, want to get trapped. You don't want to trap too much money into, trades which aren't necessarily coins that you're willing to hold, right? And yep, as you can see, we're just continuing to fall. So we're at 26,000 now. Yeah, squarely in a bearish control zone. You can see our MACD has just turned down yesterday, just turned down, and so we are crossing negatively quite strongly. That's not usually something you reverse out of too quickly. It does tend to take a little bit of time, even to get a bounce off of it. So, most likely we're going to see a significant move be playing out because we're getting that MACD crossing on the daily. And on the 2-day, it's even threatening it. So 2 days are extremely big moves to the downside. So if we get a crossing on the 2-day, yeah, hold on to your hats. But you can see sometimes the daily does get these little fake out crossings. So, just be prepared for a big move. But if we get that 2-day crossing, then you're really going to want to be prepared for the downward movement, because that 2-day signal does not fake out. Very rarely does it fake out. And anyway, when it does play out, it's a huge move. Just thinking about our EMAs, just to remind you that on the 3-day, we do have these negative crossings, which I've projected out here. And that's, of course, going to be a very bearish crossing. So we've had it here, and we're having it here. And then on the 4-day, we also have it here. And you can just see we have these significant bearish crossings coming over. And when we had those crossings in 2018, it resulted in significant moves to the downside. You can see these type of crossings, very negative on this second drive down. So, well, actually, we had a first drive down, and then we had like a pump, and then we had a second drive down, right? That was almost as harsh as this first drive down. And then that's where you really wanted to buy, at the bottom of those crossings. That's why I'm giving you guys these heads up and trying to save your butt, as opposed to other guys who were telling you to just like a buy and wishfully think that we're going to go to the moon. I'm saying we're having these negative crossings, and so you can see that drive down is playing out just like what I was suggesting. Here's the first drive down, and then we could conceivably see 22, 23,000. Who knows if history follows these type of moves. And of course, on our volatility index over here, we are seeing it starting to bottom out. And so we're having continuation, in the expansion, or pardon me, in the contraction, and it's only halfway played out. Like, we can still continue to drive down on that 3-day. On the daily, we did have, let's go over to the CME chart. We did have that extreme volatility, and you can see it's only a quarter of the way played out. Like, we could continue to expand to the downward direction. This could only be like 1/3 played out so far. So don't get fooled by, moon boys. Um, there's a lot of things going against us, and that's why for the last 2 videos I was warning you about potential fake outs on the weekend. This could be a very volatile and very negative week. See how ETH is doing. Oh man. Oh man, ETH got killed. ETH got killed. Yeah, we're probably going to see $1,000 ETH. Wow, look at this. Maybe, maybe, maybe $400 ETH. Oh my God. 600, 400. Yeah, I mean, I could see potentially $600, $400 ETH, wicking down there. And ETH will probably want to settle, kind of like this bounce. We'll probably want to settle around, 800 to $1,000 maybe. But could we see 400 to $600 ETH? Yeah, like we We really could, we really could. Yeah, stocks are just getting hammered. Oh, this fractal is playing out and it looks really bad. This fractal is from a major crisis that I took in the past. I think it was 2008 or something. It wasn't 2018, it was 2008, like a really bad crash. And we've been playing the exact same pattern this entire time. A little bit of a modification, of course, but essentially we've been putting in the lows and the highs at nearly the same spots. And that could suggest that maybe we get a temporary fake out bounce and then crash well below what a lot of people expected. Most people would expected us to hold this level um, early on, and then at least this level. But this fractal would suggest that we could smash through that and get into some very, very dangerous areas. If we break this yellow line, it could be disastrous for the economy, actually. What I've assessed is that we could probably tolerate anything above 9,500, 9,400, but below that, it's just going to be a disaster. But some type of wick there, that's okay. So let's see what next week and maybe the month after brings us. But it looks like the pain isn't over. We could potentially get some type of a bounce off perhaps support here. Just this thing is coming down so fast. And also we have a gap here that might want to get filled. So there could be some bounciness just to retest some of these prices. It's just going down too fast. So some bounciness to retest these prices and then, shock and awe, right? All right, guys, that was your alpha for the day. Stay safe. Don't get faked out. You have plenty of time to buy in. Don't get rushed by the moon boys, okay? Be careful about the gurus who are putting propaganda in your mind. You don't have to be risking your money at this point. You want to have capital preservation at this point, and then you can decide what to buy later on down the line when we have hints of bullishness. You don't have to be buying to hold when everything is bearish and in an overall macro downtrend. You want to wait for confirmations of bullishness that the market is going to turn around. Why? Because you might need that money for an emergency. You might want to invest it, in certain trades or something. But you don't want to be buying a whole bunch of junk coins that you're going to have to hold on to for a year, maybe even 2 years if it's a really bad crypto winter, and then you find out the projects die because the dev team just gave up, right? And so, you end up losing your money. That's why you want to buy when you have bullish confirmations that the bear market might be starting to, turn around. And, this channel is going to be going over those things just like we went over all the bearish signs. We were pretty much the first, on YouTube. We were pretty much the first to actually be giving the warning signals, while so many other gurus and so many other channels were just continuously trying to push you into buying stuff. And even worse, which is just gross negligence, they were trying to push you into holding things, which you never want to hold assets in the beginning of a downtrend, which could have a macro bottom yet to be seen and a crypto winter for God knows how long, because any of those projects could die. And it doesn't matter how good those gurus think that they are. Most likely they were only born during the most bullish eras of crypto. And so they have no idea what hardship in the macroeconomy in the real world could bring. And so nobody should be advising you to buy things to hold for a long term right now. You can DCA into good projects if you personally really believe in it, but you know the motto on this channel, always take your profits, always be selling, always be taking your profits. And just my opinion, if we do, get some type of a bounce, you take your profit at the next support, right? If bullishness starts being printed on the screen, then you already took your profit. So it doesn't matter. You can just buy back on a retrace and sell at the next resistance and continue forward until we have an actual bull run confirmed. But otherwise, you should just assume that everything is a relief rally and that we could be flat or sideways for a long time. And so you don't want to be holding any asset that could be dying, that could potentially go under, or that could have a scandal like Luna or some of these other coins that you thought were really good projects, but then you find out something's really weird about it, right? That's my advice to you. Again, stay safe and happy trading.